A lot of fear in the crypto markets. However, it seems that Bitcoin accumulators, the long-term investors of Bitcoin, are accumulating. They're buying the dip. They're buying the fear. In this video, I want to break down some very important on-chain Bitcoin metrics that suggest the Bitcoin bottom is here, or at the very least, very near, and why the bears should be very ready. What's up, everyone? Welcome to Crypto Capital Venture. Hit the subscribe and like on the way in. Really means a lot to me as I grow this YouTube channel. Let's jump into the Bitcoin video. This is weekly, zoomed out. It's the story of supply shock. That's simply what's going on here. These white lines represent the halvings that have taken place on Bitcoin, and it just happens. Bitcoin just there's this demand for Bitcoin, and especially in these fearful environments, which is kind of where we are right now, long-term accumulators, they know the drill. That is to accumulate. That is to buy Bitcoin. And on-chain metrics demonstrating happening right now after this current 50% dip that we've been in the last couple months. So let's dig into the data. William Clemente just providing some really good on-chain metrics for Bitcoin. Bitcoin is now in heavy accumulation, supply shock in play. There's been a clear bullish divergence in strong hands buying versus price. But check out that big spike printed last night. Keep in mind, this is a July 3rd tweet. This is a couple days ago. But this force is pushing up against price. So check this out. This is the Bitcoin liquid supply ratio. This is the dip, right? Lower lows on this kind of short to midterm chart that we've been in, this consolidation that everyone is kind of we're just getting through it, right? This downward little trend of consolidation. But at the same time, look what has happened. And this is what happens. Strong hands begin buying. Strong hands begin accumulating. This 50% dip, the strong hands, the accumulators, stepping in. This is the story that Bitcoin has been in since the beginning of Bitcoin. This is what happens. And it's important data to kind of actually keep in mind, keep in the back of your mind, because there's the emotionality aspect of the markets. And then you step outside of that and you have strictly data. You have strictly this long-term story of supply shock. And you can figure out how you want to step into that story on the fearful side or the non-emotional kind of accumulator side of things. Check out this spike in Wales. Wales added over 64,000 Bitcoin to their holdings yesterday. Again, this is a July 3rd post, but check this out. Look at that spike in Bitcoin Wales. And then it goes on. Exchange inventories are down 24,259 Bitcoin in the last week, now trending sideways bullish. So exchange inventories down. The fear is just there in the markets. I just see it on Twitter all day, every day. I see it in the YouTube comments all day, every day. Bitcoin accumulators accumulating. It's a perfect storm. It really is for bullish continuation. Not to mention on the Bitcoin charts, there's a lot of just strictly charting data that suggests that we're still just very much in the middle of this bull market. Here's another tweet by William, another Bitcoin bottom signal. This is something we've been tracking. SSR has only dipped below the lower band during 2018 capitulation, March 2020 crash, September 2020, and now. This is such a cool and interesting chart to me because, and he circled these bottoms here on this stablecoin supply ratio. And here's the Glassnode chart kind of updated in real time. And I've mentioned this. Here's that March low. Here's the September 2020. And just from a charting perspective, what's really interesting about this to me is the November bull market doors that we tracked. And we kind of went into saying, this is it. Bitcoin breaks this area on the charts in November, and this is kind of where it is on this chart. We're entering that bull market phase, right? And that's what's happened. And what's so cool is the charts, this on-chain metrics, signaling that exact type of bottom with these metrics. So going on to this tweet, this is another on-chain metrics. Bitcoin difficulty. So Bitcoin difficulty adjustments alter the difficulty of miners finding blocks and occur every 2 weeks. Today is the 9th downward difficulty adjustment of 11% or lower. Now, check this out. And this was July 3rd as well. Today's 28% adjustment was by far the largest. Until recently, all occurred in the vicinity of market lows. In the intro, I said the bears, they really should be ready. They should be prepared. There's no guarantees in this market. There never are. But when you have the consistency of these different data points from on-chain metrics, you have to pay attention, right? And obviously the bulls will love this if this does signal the bottom. And you can just check out this chart. This is historically the difficulty adjustments where they're 11% or lower, and just check it out. I mean, we're looking at 28% difficulty adjustment. Now, it doesn't mean it's immediately the bottom, right? In my mind, when I saw this, I was my first thing I saw was like, what's the next, not even below 11%, but what's the next besides 28%? The biggest difficulty adjustment, right, to the downside. And it's back here, 18, right? And this was in 2011. And it wasn't exactly, if you can look over here on the chart, it wasn't exactly signaling the bottom, but it was definitely in the vicinity of the bottom. And that offers us some clues, because in terms of putting all of this data together and kind of integrating it onto the charts, we've been saying on the charts, we are in the middle of this bull market. And I still maintain that opinion. If you look at this halving right here, Bitcoin, let me get my brush. This Bitcoin 2020 halving, here's those bull market doors November. That last time in September, Bitcoin put in that bottom on the supply ratio, stablecoin supply ratio, entering that bull market. We're putting in a very similar chart area on the on-chain metrics compared to where we are in this dip. But 413 days post 2020 halving is kind of where we are right now. Now, we also at the same time got this bounce off the 1618. You know this, I've been talking about this, but we had a very similar bounce in the middle of the last bull market off this 1618 here. And we're at a very similar area on the charts, in my opinion. So when you start looking at all of this on-chain metrics that we just looked at, the difficulty adjustments, potentially signaling the bottom, or at least the vicinity of the bottom, right? And we go back to this chart and we're looking at it, and then we say, okay, what if we didn't exactly put in the bottom yet? Where could we, if we are in the close vicinity of the bottom, what could that potentially look like? And we start anticipating and speculating a little bit, because you want to be prepared for maybe another leg down. And what I do is I take that swing low, bear market low, to this swing high. This is a macro Fibonacci. And let me get rid of this other one, this old Fibonacci. And this is it. This is that area of, in my opinion, if Bitcoin falls into this area, heavy accumulation for me. $27,000 to $16,000. So Bitcoin could very well be in the general vicinity, as we discussed, and as it's mentioned in this tweet, based off just difficulty adjustment and all these other things we looked at. Bitcoin can be in the general vicinity with one more leg down getting ready to happen, and we have to be prepared, right? So be prepared that the bottom happened, number one, especially bears. But number two, if you are an accumulator, if you're a long-term accumulator, and trust me, the long-term accumulators, they're not done. If there's another dip into this segment of the charts, into this long-term Fibonacci, this 618 to 786, there's going to be a huge amount of accumulation occurring. It's going to be insane. I'd be very, very curious if Bitcoin fell anywhere into this area to see what a weekly chart or a weekly candle looks like, a wick on the weekly, what it really looks like. A monthly candle, what could it look like falling into this range? Again, this is, and we mentioned it, this is a supply shock story that's happening right now. Mentioned throughout all this data, Bitcoin now in heavy accumulation, supply shock in play. So I wanted to really just integrate, and we've talked about these basics on this long-term chart, and there's obviously other things in play. There's shorter-term patterns, there's moving averages. We didn't even talk about momentum oscillators and where Bitcoin is. We have cooled off so much on this MACD, so much room for a shift now on those charts. RSI, nowhere even near overbought anymore. We're oversold on the stock RSI, this quicker moving momentum oscillator. There is so much to lend a hint at the fact that the bottom is in, or at the very least, very, very close. And we have to really put it all together so we can be prepared. This is just data, everybody. And historically, this data proves to be very, very consistent. So I think we should all pay very close attention to it. Let me know your thoughts in the comments below. I'd be really curious to know what you think about the bottom. I know I see it, and I know there's a lot of you bulls out there. I know there's a lot of you heavy accumulators out there. But I see a lot of fear in the markets. And even maybe somebody doesn't want it to be bearish, I can see them kind of protecting themselves, protecting their mentality, their emotion, by just saying, it's bearish, another leg down, Dan, just so that they can be ready. And that's fine if that's the way you want to approach it. But let's just look at it non-emotionally. And the data suggests the bottom is here or very close. So let me know your thoughts. Hit the subscribe, hit the like. Appreciate each and every one of you. I'll see you in the next video. God bless.